Welcome to the daily stock review of Amazon. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor on the journey. I'm just 2,500 hours in over the last 7 years, and I'm sharing the lessons along the way. Today, we're going to go straight into Amazon's stock review. This is my investing process. It's got 5 steps. Today, I'll give you a rundown on where I found and came across Amazon, so where to look for these opportunities, and then we'll do a 5-minute check to see if it's worth looking into further. Learned from these guys, aiming to follow the breadcrumbs that these guys were left behind so that we can follow in their footsteps. Let's jump straight into it. So came across Amazon through actually doing a bit of research and study around these great investors. Obviously, I know Amazon in everyday life as well, and have seen it become more and more surrounding like everything in terms of cool. Everyone's gone online. You can buy this through Amazon, etc. So a couple of different areas. There are actually one of the investors came across it back in 2004. Back before it had really blown up from there, and invested in it back then, and has continued to be a shareholder pretty much to this day. So that's where I've come across it. You can look for these opportunities in everyday life as well. You don't need to be crawling through and doing screens on stocks just to find opportunities. All right, so what I'm looking for in my process is step 2, we just want to find the annual report and the latest one. So you found it, 2025, want to crack that open. Now, these usually, Amazon's ones and previous ones back in that 2004, open with the CEO's rundown on the situation, which used to be our man Jeff Bezos, but it is now the reasonably new Chief Executive Officer since, 2020, 2021. So I don't want to read any of that. I want to just jump straight into where the financial statements are, because from that stage we can find 3 things. Let's just try here. All right. So we can find 3 things from here, and these are what I'm looking for. So mastery, so has the business mastered its customer? We should see that through a few of these numbers. We want to see that the growth of the business is increasing, so in terms of revenue, and that they're also got pretty good margins that are coming out of the business as well. We also want to see their moat. So does the business have some pretty good pricing power? So as we go through some of these numbers, we'll then see what have they made at the bottom line of the business and the cash flow as well. If the business doesn't have good pricing power, it doesn't have a strong moat, and then that deteriorates, the business doesn't make money, and it's just a fight to the bottom. The next one is management. So when we get to the cash flow statement, it's usually easy to see whereabouts management is prioritizing where they're putting the money of the business. So we want to see that they're making some smart decisions there. All right, so let's crack in. Cash equivalents. What do we got? I got cash flow statement up first. I don't want to go through that first. I want to have a reasonable picture of what's going on. So we got here is statement of operations. This is also known as the income statement and the profit and loss statement. So product net sales, this is in millions. So millions and then billions. So what can we see? 23, 24, 25. So over the last 3 years, we've seen net product sales increasing steadily. We've also seen total net sales, so net service sales as well, has been increasing. So they've gone up from 574 billion, 637 billion, 716 billion. Now they got their cost of sales, they got their fulfillment costs and technology, infrastructure, etc. What are our total operating expenses, and what's our operating income? So once they pay off most of these bits and pieces, they're left with $36 billion, $68 billion, and $79 billion. And you can see that over a 3-year period, the operating income has doubled, which is awesome. Still an amazing business over 20 years on. Now let's go and see what else we can see. So net income. So this is what effectively called the bottom line of the business. We've got 30 billion, 59 billion, so pretty much doubled there just in those 2 years, and then up to $77 billion as well. So over a double, over a 3-year period. It's pretty amazing. And now we want to have a look for the balance sheet. So I just want to make sure that this business is healthy, gives us a bit of a picture of when we look at the cash flow statement to see, hey, does this business actually need to be hosing down debt before trying to target some growth and things like that. So let's just look at the big numbers first. Total assets compared to total liabilities. Do we have a total liabilities? Total liabilities and stockholders' equity. Well, that just balances to that. That's annoying. Where have we got? So total current liabilities, we can have a look at that. 179 to 218, which is definitely smaller than the total current assets. All the current means is current assets are things that can be turned to cash within 12 months. And non-current assets are things that would take longer than 12 months to turn to cash. Similar with the total current liabilities, these things they expect to pay within the next 12 months, and then things that they need to pay after that period. So we can see here that, yep, the total assets is definitely a lot larger than the total liabilities. And is there any major long-term debt and things like that? So long-term lease, that's cool. And long-term debt. So long-term debt has definitely not doubled, and within that time frame, so it's not increasing in lockstep with income, which is a good sign. If it was, that'd be something that we'd want to keep an eye on, because when revenues and sales aren't going up, but they still need to either maintain that position with debt, that can be an issue. So that's pretty reasonably healthy. What else have we got? Comprehensive losses, additional paid in capital, accumulated other comprehensive income or loss, retained earnings. All right, cool. Next thing I want to do is we want to go back to that cash flow statement. So before we jump in, so far, mastery, has the business mastered its customer? I'd say yes. There's definitely a substantial amount of money that's still coming into the business, and the business is growing very fast still. What else can we see? The moat of the business, those net margins that are coming out through the business at the end of the day, and the amount of growth that it's having is very high still. Now, cash equivalents, all this means is what cash they started with, and that's what we see in the income statement with these net income. So 30, 59, 77. Now what we do is these kind of like non-cash charges and things come back out. These aren't things that have actually affected the cash flow of the business. They haven't paid for these things yet. They've just allocated that money to the side. So stock-based compensation, non-operating expense, deferred income taxes, etc. They will need to in the future, but it hasn't affected it just yet. Now we get down to a couple of things here that will come out of the business, and then net cash provided in operating activities. So this is the cash that the business has got and then needs to spend through this year. Then it needs to pick and choose what it spends its money on. So purchases of property and equipment, proceeds from property and equipment sales and incentives, acquisitions, etc. So we can get the free cash flow of the business by looking at grabbing this number and it's subtracting this one. or in this case, adding them together because the brackets just mean it's a negative, so it comes out. And we're left with, we're looking at 30 billion, a little bit over, pretty much 30 billion again, and a little bit less for this year. But what are they doing? So we can see here that this business, or Amazon, is getting all its cash flow, or surplus cash flow, free cash flow at the end of the day, and it's plowing that into purchases of property and equipment. So it's doing that pretty much to continue to grow its base and provide more scale. So I have done a fair bit of research back on Amazon, especially on the early time. So going back in there around that 2004 to 2012 period of time. And that's their whole basis, is to continue to, any amount of money that these guys make, they plow it back within the business to continue to expand. And it's their flywheel of growth. Now you can see here net cash flow used in investing activities. So they pretty much pumped all of it into that. Financing, so that's just really juggling the rest of those numbers. And we can see here that they have pretty much just been maintaining that position. So repayments of short-term debt and other. They've also got proceeds of short-term debt and other. So they get us, the banks, for a bit extra money. They pay off the debt that's due and just keep it balanced. What else we got? There's nothing else in here. It doesn't appear that they are repurchasing their own stock and things like that. They're pretty much just plowing all that money back into the business to continue to grow that scale of the business as well. And what we can see is pretty much the free cash flow of the business, or the cash that it's generated from operating activities, is growing year on year. And pretty much if you look at it just purely free cash flow, the business has pretty much stayed constant because they are plowing it straight back into growing that scale. Now, is this business a great business? Is it going to 100x again from what it's already done? Well, it's potentially. This would need a pretty good look at what markets it hasn't reached into and penetrated yet. There's definitely parts of the world where Amazon hasn't grown into and fully matured in. It's definitely in the US. It's definitely in some some European nations and things like that. Do I know the latest on those? No. But looking through the annual report and seeing the percentage growths in those different marketplaces is definitely where I would be looking next to do a bit of a deep dive on it. Just to see what is the total addressable market for it, which they call a TAM. So obviously once Amazon reaches the entirety of the world, every country, etc., that growth will definitely slow down, and it'll pretty much come back to having just the natural growth of the population as they either increase in wealth and have more money to be able to spend on products or services that you buy through Amazon, and things like that. All right. If you like these breakdowns and things like this, feel free to subscribe. If you've got any questions and things like that, just leave a comment and I'll get to them in a future video and do a review. If you want to see anything else, or the video of breaking down how other investors have found these businesses before everyone else had and were able to make significant returns, you can check that video. It's on my other channel. You can just grab down there and click the button, you'll find it. And otherwise, check out this next video because YouTube reckons you'll like it. Cheers.